for the auto sector today is a Bajaj Auto that just reported its earnings just some time ago, and well, the Pune-based two-wheeler manufacturer is seeing quite a nice big jump on its bottom line, a 20% year-on-year rise we're seeing in its profits for the September quarter, which has come in at 1,836 crore rupees. If you look at the revenues from operations, that has increased by a tad bit at 5.6%. If you look on a year-on-year basis, coming in at 10,777 crore rupees. Well, if you look at the EBITDA, that for the first time, in fact, has crossed that 2,000 crore milestone as well. So the numbers are looking pretty decent at this point, especially for the auto sector and what we're expecting as well for the second quarter. So let's discuss these numbers and also what really is in store for all of the other auto earnings that we're likely to see in the coming weeks. And to do so, joining me is Abhishek Gaushinde, the research analyst at Sharekhan by BNP Paribas. Thank you so much, Abhishek, for giving us your time. Let's look at the numbers from Bajaj Auto that have just come in. If you look at the profit number, that is pretty much beating analyst expectations. We're looking at a 15% of sorts in the bottom line in the profits, but it's come in at 20%. So how are you looking at these initial numbers from Bajaj Auto?
See, broadly, we see that as the Bajaj Auto has reported numbers above our estimates. This is the consecutive fourth quarter when Bajaj Auto has reported an EBITDA margin above 19%. So on a QQ basis, you see that the volumes were grew by just 2.6%, but because of the better product mix and the gross margin expansion, the EBITDA margin has expanded roughly by 80 bips, which is 60 bips above our estimates. And because of that, the bottom line performance has exceeded the street estimates. So the two things which I would like to highlight about the Bajaj Auto is that its performance is not so much dependent on the volume growth, what it reports, but on the volume mix. And second, that the export volumes have been somehow bottomed out. So going forward, what we are expecting that once the export volume would recover and the premiumization play would continue in the domestic market as it has already came out with the Triumph 400 kind of a product. We are quite confident that Bajaj Auto would continue to sustain this higher EBITDA margin, and with this kind of a performance, the stock deserves a kind of re-rating which has been pending for a very long period of time.
Right. You were talking about volumes, and that's what we're seeing that, that is on a sequential basis that volume might be looking at a lower number, but on a year-on-year basis, they are still, you're looking at those increases. So how is somebody supposed to read these that volume growth as such for autos in general?
See, this year is a very peculiar year where in most of the segments you will see a single digit kind of a growth, low, mid to high single digit kind of a growth because of the high base. But what is peculiar in this particular year is that the earning growth would be driven by the margin expansion. That has been visible for last 2 quarters, and we are expecting that that trend would continue in this quarter also. Yesterday, CH has reported its number. It has also reported EBITDA margin expansion. Today, Bajaj has also reported EBITDA margin expansion. And we are broadly, our theme is that for FY24, that the earning growth in the auto sector would be driven by the margin expansion, supported by the premiumization in the top line and the gross margin expansion due to the benign raw material cost. So far, we are seeing that kind of a trend, and this is the key hypothesis for auto sector in FY24.
Right. So, given the fact that we are seeing these commodity prices really soften, which is aiding this number, and we've seen those price hikes that have happened over the last few months really play out. So, are we expecting this similar trend to continue also, especially because we are into the festive season as well? So, is there a better pickup now that we're going to get to see?
See, if you see that in passenger car segment and the two-wheeler segment, in both these segments, the entry-level segment have been suffering, and that is reflecting the situation of the economy. But the premiumization has been continuing. Even the mass market players like Hero MotoCorp is talking about the premiumization and its overall product profile. And if you see this Bajaj Auto's number, so in this particular quarter, the proportion of a 155cc products in its domestic portfolio has been increased even on the sequential basis. So continuously the trend is moving towards the higher side. One. Second is that the raw material, whatever be the raw material cost has been increasing, these players are continuously passing it on to to the customers. And third is that they have been made a healthy control over the fixed cost side. Uh, EV is coming out, which is giving them higher realization and side by side compensating the increase in the profitability in their traditional portfolio. So the mix of these two kind of things, we are expecting that as a margin expansion theme would continue, and that's why we are seeing that the valuations have been increasing of in this automobile sector since April. Such kind of a re-rating we haven't seen such kind of a re-rating what we have seen in the last past 6 7 months in last before the 2 3 years back in a automobile sector.
Right. What about the product mix? Now we are seeing, like you mentioned, entry level doesn't really change much and all. For Bajaj Auto, they also have the three wheelers, which is actually the driver for them, not so much because of that slow pickup that we're seeing in rural recovery. So, how are we going to likely see more launches going ahead? What is going to be driving these, their sales for them?
See, product launch cycle would continue. Even if you've seen that Raju Bajaj has also mentioned some time back that we may see a strong product from the this Pulsar revival of the Pulsar brand by the quarter 4 of this year. They have already launched introduced this Triumph and now waiting for the increase in the delivery and the exports also.
Right.
So product mix. See, this is the thing with the Bajaj Auto historically that we have seen that despite being a low market share in the domestic market, but because of the focus on the premiumization and the improvement in the product mix, along with what you have mentioned about the three-wheeler side, it has been consistently delivering higher EBITDA margins. And what I am emphasizing here is that the margin gap between the Eicher Motors and the Bajaj Auto has been narrowing down, and this may reflect in the improvement in the valuation side for Bajaj Auto.
So, which is why you're saying that there could be a re-rating in the share, like if, especially
Yes,
if you look
yes.
the today's script, yeah, was obviously reacting to in anticipation of those numbers. But if you look at Bajaj Auto, 45%, it has increased since the beginning of this year. Pretty much the fourth best performer on the Nifty 50. So, what more can we expect from Bajaj Auto in terms of the stock?
See, currently stock is trading at around 19-20 times FY25 estimates, and there are 3 4 key drivers are still in hand. One is that the entry into the premium iconic bike segment, that is a Triumph. Second is then export has been bottomed out, and there is likely a recovery in the export market once the macros in that market would recover. Third, that their three-wheeler portfolios have started doing well. They are doing well in the mass market premium motorcycle segment. So all these things are saying that the kind of momentum which Bajaj Auto has been delivering till now, that would be maintained. And we have an upcoming festive season that itself will boost up the sales, especially in the two-wheeler segments. So considering all these things, what we have been focusing here is that the overall structure of the Bajaj Auto has been changing. It has not performed. The stock has not performed. I think in previous 1 to 2 years. Last year it was a buyback offer, and we have seen the stock has
Yeah.
been moving in the range of 3,500 to 4,200 something, that range. But once it has started delivering EBITDA margin, then it itself come out with an case of a re-rating. Now the concerns are little in that, and we don't know that where this EBITDA margin cycle would settle up on the upper side, because raw material is in their favor and the product cycle and product mix is in their favor. So we believe that it may caught around 20 to 23 times 1 year down the year in a coming period.
But could we say that the EBITDA margin would be in that 19-20 range that we're seeing it currently, or there is
Yes.
room for it to even go further higher?
See, once it will reach this 19-20% region, then obviously the company would start reinvesting this higher profitability into the other business. Like it may expand its product portfolio in a three-wheeler business, or it may offer some kind of promotional things or offers or discount kind of a things in the exports market to drive their volumes, because at some point of a time uh, they would get a comfort in a profitability side, and then they will start reinvesting this higher profitability into driving up their revenue. So you have a
Right.
stable EBITDA margin at higher level, your top line would start growing. So definitely these two factors will drive your bottom line in the
Right.
coming quarters
So
also.
can we also then translate this to what we're going to expect from the other auto companies, or everyone will face, at least for two-wheelers, if we have to draw parallels, is there something that we can see, rural recovery, that turnaround has happened, exports are now bottoming out. So is this likely to, we're going to see this even with other companies?
So similar kind of a thing is happening in the Hero MotoCorp also. In last quarter, its underlying IC business has reported an EBITDA margin of roughly 14% kind of a thing. If you adjust the losses in this electric vehicle business, so now it has reached an EBITDA margin. It has looking for an EBITDA margin range of 14 to 16%. Now it has reached this 14% kind of a EBITDA margin benchmark. Now we will see a play of a premiumization, product launch, and increase in the volumes in the Hero MotoCorp side also. Similarly, in you can see the TVS Motors. It has also been maintaining for EBITDA margin of roughly 10% kind of a margin for last I think 7 8 quarters. Despite being increasing their presence in the EV business, it has been maintaining this kind of margin. So once the EV volume would ramp up, and that would start contributing to the profitability, and its existing IC business would continue to deliver as it has been seen. We may also see a kind of a EBITDA margin surprise in the case of a TVS Motors also. So
Right.
although it appears a contra view, but what I believe that the two wheeler is the need of the market. You need two
Mm-hmm.
wheelers in a tier 2, tier 3 cities for the last mile connectivity. We don't have a Mumbai Delhi kind of a transportation facility across the
Right.
universe. And second thing is that every year, by some logic, our population has been increasing by 1 to 1.5%. So every year you have a more than or around 1 crore population which is coming above age of
So
18.
there's
So
always going
they
to be.
all are. Yes, yes. That themselves is a demand driver. One can buy. One can a youngster may like to have a bank balance of his father, but he may not own the motorcycle or the scooter of his father. He may like to have his own. So that trend will be there. It is a matter of a time when we will start seeing the revival in the entry level products also. But
Right.
there are structural demand drivers are intact. What I can say in the two-wheeler side.
Right. So I think it would be safe to say that Bajaj Auto has really like now stepped off the pedal, and we're likely to see other auto companies also following suit, at least in for their second quarter earnings. Pretty
Yes.
much all hopes are pinned that it will be a good one for the auto sector, at least for now. And all of these factors, be it from the softening commodity prices to the premiumization and the new launches that the companies are coming up with, all of that really working out well for Bajaj Auto, and hopefully for all the others that will be putting out their results as well. I'd like to thank Abhishek Gaushinde from BNP Paribas for giving us this time, and giving us a sense of what we're going to expect from auto earnings now that Bajaj Auto is out of the way. Thank you so much, Abhishek, for giving us your time.
Thank you. Thank
And to all our viewers who tuned in. So thank you very much.
you. Thank you.